Hey guys, Tyler here. Welcome to another video. Today we're going to be reviewing a trade made by ICT Today where he went against the trend of the market, making about $3,500 with 10 contracts on NQ today. So we're going to be reviewing that trade, and I'm going to provide my own commentary, not because I know more than ICT. He is my mentor in the day trading space, but I believe there's some things that he does not always put in his videos or provide greater context on why he took the trade. We're going to be reviewing that today. In addition to that, if you would like to join me on some live streams, I live stream 2 to 3 times a week trading the NQ, where you can get my commentary. We can hang out together and try to make some money. So if you want to be involved in that, consider subscribing, like this video, and let's go ahead and get started.
Well, good morning, folks. So I'm going to be trying to put a short on in here using the 15-minute SIBI.
All right, right there, I want to stop. He said the idea behind this trade is because of a 15-minute SIBI. Let's jump over into the charts and let's actually get greater context on why he's making this trade. Right here is the 15-minute SIBI that he's referring to. And if we pull this over right here, we can see that around 747, price broke through that SIBI, or that 15-minute fair value gap, and then it started consolidating. And he said he's going short because of this 15-minute fair value gap. Now, I think there's some greater context needed, because I don't think anybody should ever go short because a 15-minute fair value gap is filled. One thing I like to do is I actually like to go over to the 15-minute fair value gap on a lower time frame to see if there's more clarity on why price could reverse here. So if we did that and we go right here, this is that 15-minute fair value gap on a 1-minute chart. Now, what we see right here is a bearish breaker. This is the high, low, higher high. Price comes up into it and then retraces down or goes down. But guess what it doesn't do? I remember watching this the other day, and price never came up and hit this breaker. It left this breaker wide open. Now this breaker is a 1 minute, and we're going to put, fill this up here and change the color of this to yellow. And we're going to pull this breaker all the way over. The trade that ICT took is right here. This gray box right here is what he took. And here is the here's the 1 minute breaker that we looked at that was next to the 15-minute fair value gap. Look how price respects the consequent encroachment. Seeing this gives me significantly more confidence that price is going to be retracing, and why ICT potentially put his first entry at this fair value gap, but it actually never retraced up here. He got his entries here when price began, when it closed below this inversion gap right there.
So if you look at how we have had multiple attempts to trade higher than the 320 level, they're jagged. So I run the risk of not getting a fill here, but that gives me insight. This could become a breakaway gap. Right now, we're looking.
Okay, so one thing he mentioned here is right here. He talked about how price was not making any higher, however, it was jagged. What he means by that is this last run higher grabbed liquidity here, and then started moving the other direction. He started his whole live stream on the 809 candle, and that's where he started his live stream. So he's like, well, this is my opportunity to go short. He wanted this fair value gap to be filled, but it didn't.
Looking at it as a potential area to go short. There's a volume imbalance in that area just to the left of it as well. So I'll measure the wick in here, see if I can get my stop just above the consequent encouragement of that wick, midpoint basically.
He's basically saying that he thinks price is not going to go above this wick right here.
And I'm just waiting to see if I can get a fill. If not, I'll have to take something lower. And that's fine because there's a potential inversion fair value gap.
This is the inversion fair value gap that he's referring to right here. He's waiting for price to come and fill that. These two blue lines he put out on the 1 minute, and here they are on the 15 minute. This is a fair value gap. So he wants to target these lows and then have them actually take off part of his trade right here but ultimately he's targeting these equal lows.
So far, it looks like it may want to run lower without going up into that inefficiency in price. I have no idea where my limit orders are.
Now, my specific model that I trade is actually right here. We have a high, low, and a higher high. We have a fair value gap to the left. The only thing that's missing is the fair value gap to the right. And you don't need one to take a bearish breaker. You can actually wait for price to run these lows, which we did, and it's a market structure shift. And then as soon as it closes below this inversion gap, you could look for an entry for it to touch this low right here, and this low would be your entry for a bearish breaker to the downside. So my model is in ICT's trade. He just was looking to take it earlier because you don't trade breaker models, you don't trade patterns, you trade liquidity.
Yeah, I like this little area here. It's a little too smooth. Let me show you. Get this here. See all these lows? See all that? That's my eye jumps right to that stuff. Wherever the markets are real smooth, my eye goes right to it. It's just years of looking for it, and I see that as a draw on liquidity. It could go lower, but those are the levels I'm looking at for how the market will reach for a discount. Because right now we're at a premium, and it looks as if I'm not getting that. So we're going to note the inversion fair value gap here. And I say that loosely because sometimes I may be trading. I'm going to lower this down here. So I want to try to get in.
There it actually touches the breaker, and at the same time ICT is getting
Put this in here just a little bit above the consequent correction of that inversion fair value gap. And
thing I want to mention here is the confluences that are happening. You have the inversion gap, you have a market structure shift, you have a breaker, you have a higher time frame, fair value gap that's been filled, you have a breaker that we're rejecting right up here. So there's multiple reasons for us to consider going short.
Don't think we're going to run yet. I might want to bang one more time in there. If not, I'll use the low of the inversion fair value gap to get me in. Try not to be too demanding on it today because there's no news. There we go. Now we're at the dance, so let's go. All right, so I have my stop now up where the volume imbalance, just to the left of that pink inefficiency. I suspect that now is a breakaway gap, but I'm monitoring price. I'll come up and annotate that in a minute, but that's my first partial. And that may graduate lower depending upon how we move here. We're just trading at an immediate rebalance with the up close candle trading into the bottom of that inversion fair value gap. So far, we're seeing exactly what I'd like to see: immediate responsiveness.
What he just mentioned there was an immediate rebalance, and something that I have not put enough time into to be able to see it. But what he's talking about here is how you have this bearish order block right here. Price comes down, retraces, and leave this wick. We then open the new candle, the current candle right here. When price wicks up into that and then moves away, that is an immediate rebalance. And one of the characteristics of an immediate rebalance on the right side of the trade is it moves aggressively away.
Just lower. I'll widen these candles so you can track a little bit better. And moving the stop lower just above the inversion fair value gap. It should not return now to the upper side of that. And I'll note this is a breakaway gap now. And I'll make it yellow. I really don't like yellow, but I just want to draw special attention to that because you can see as the trade pans out. As you can see, we are not using market replay. We don't look at the fake results like that to garner online clout. And the countdown to candlestick close, you can see that in the right side price axis of TradingView, and it is market open. So nothing here is delayed, nothing is fake, nothing market replay. The actual live executions over live price action. I'm going to maximize this. You can see a little bit better. The trade looks overall really nice where it's at now.
Now, if I was looking at this trade and I missed this initial move, there would be no entry for me to actually get in. I would be looking for price to come up and hit this low right here for a breaker for a potential entry.
And I'm contemplating lowering that partial. I'm looking at that swing low between 7:30 and 7:40 a.m. and that sell side. So that's what I want to do. I want to take the first partial there. So let's take this off here. We don't need to show that anymore. So first partial, let me just annotate it. Well, how do I say it? I'll just type it here. Is a minor sell side liquidity, meaning that it's not the terminus of move. It's just this is the initial minor sell side target while being short. I want to see a trade there for my first partial. So therefore, it's hopefully being communicated effectively here. And because of that 15-minute time frame inefficiency that I annotated before maximizing this 1-minute chart, that's those blue levels here, 18,307 and 18,304.75. That's that 15-minute old bottom bounce outside efficiency, where it traded down half of it. You can see it between the 7:30 and 7:40 level.
Okay, one thing I want to mention here is he referenced that his first partial is at this 15-minute fair value gap. And the importance of taking off a partial is we don't know if this is a retracement or a reversal. In this case, it was a retracement. We hit these equal lows right down here, and it reverses and continues higher. But the importance of taking off partials when you have multiple contracts is it guarantees profits and protects you from break even or losing on a trade.
So just floating above that first partial, and it should have really filled me. There you go. Must be random. All right, so now what I want to see is I want to see it get real heavy in here because we're inside that 15-minute old buy sign about sell sign efficiency, and there's a gap in the blue on this 1-minute chart. So there's really not a whole lot of ground to stand on in here. So I want to see large ranges kind of like protract lower.
That's the fair value gap he was referring to. That was in the blue. This blue right here on the 1-minute. There's that fair value gap. And then there was, outside of that, there was no other reason, meaning there was low resistance liquidity. There's no other fair value gaps outside of this 1-minute that could hold this price from targeting these lows. So low resistance liquidity means there isn't fair value gaps or reasons for price to pause and turn. It will actually run for the equal lows or run for the liquidity, the swing low or the swing high, before it potentially slows down. And that's what he's looking for here, and he's a master at calling it before it actually happens.
So I'm preparing to take partials off, at one contract at a time. I want to see the bottom of that, or the lower blue line here at 304.75. If you can trade there, I want to take one off. I think, come on, just a little bit more. Yeah, I'll take one there. And I want to take some in here. There you go. And now I have 3 left. I'm going to let that stay and ride to the lower target where it's too smooth in there. So far, it just looks really, really good. Everything that I'm looking for is in motion, and we're really in striking distance. So this has been just a real dandy of a trade here.
The thing about the reason why I know he did not know that price was going to turn here is because he wouldn't have taken off 3 partials here as price was pushing lower. He knows there's a chance that it could reverse, and just being wise, a wise and smart trader, he's taking partials along the way. Price does, as we see right here, it does wick that low, and he's able to take that profit, coming out with about $3,500, and then it moves in the other direction. Now guys, if you like trades and analysis like this where we break down ICT trades, going in more detail, consider liking, subscribing. Thanks for watching guys, and we'll see you in the next video. Take care.